Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, March the 25th, 2024. Interesting day again, and that the market did at some point appear to have dropped down and likely completed what I was looking for, a small fourth wave, and then started to rally, but then got sold off a little bit hard in that last half hour before the bell. And so for those of you who think that you cannot teach a new old dog new tricks, I was speaking with colleague Sascha, who normally will be doing, still likely be doing podcasts with me. We've just been unavailable this past weekend. And we were talking about the count, and then suddenly the market started to sell off pretty hard, and we're like, okay, what's going on? And Sascha said, look at this. And so I did. So first, let me just do a quick review. Here we are, still within this, what I believe is a diagonal triangle to finish. Let me go up one more, and let me just open it from here. We're in minor wave 5. Minor wave 5 will consist of 5 waves of minute degree, of which we have 1, 2, and looking to get to a finishing point for 3. So this is going to move on for a while. This is going to take a little bit longer before we're done with minor 5. It's going to take a little bit longer before we're done with minute 3. So we remain within minute wave 3. Now, it's already starting to press against levels that I don't really necessarily want to see it press against. The first one being that I don't want to see it come and overlap this very small wave 1, right? So what we're in, so here is minute wave 3. I need to kind of put this up because I need to put a C wave in there. And what I'm looking for here is we have minuet wave A of minute wave 3, minuet wave B of minute wave 3. So we're in the C wave, which will consist of 5 waves. So I need to move that down and move that up so I can put the C in there. But in any case, 1, 2, 3, we start to come down in 4. It starts to get really a little bit sketchy. We got all the way down to 18,414, almost 15. And then it started to pick itself up. Let me go back down now. Let's go to the 15-minute. Let's look at the inside. So we came down, and then we rallied back up. Now, 2 scenarios that I want to present. One, again, this is Sascha teaching this old dog some new tricks, and it's really nothing more than just like a double ABC, but we're labeling it a little bit differently. And so I'm going to use the labels that were given to me, W, X, Y, and then another X wave, and then a Z. Now, if that's the case, these should be over a little bit more. Boy, they're all the way up against there. That's not where I left them. Bring them over here. Bring it over here. There you go. So we're still looking for the completion point for wave 4, according to how the market was left selling itself off very quickly. So scenario number 1, that it is going to be a WXY and then another X, and now we're going to do the Z wave, and then that will put in. Now, accordingly, from what I understand, we use the fib, and we're taking X down to Y, back up to X, the fib 0.618. Most common 0.618, where we would expect wave Z then to kind of come down. That's 18,443. Now, I believe there's one additional below here, and it might be, let me just toss it out there to see. I believe then there's a 786 and maybe even a 1. 14,808 and 14,364, and 14,364 breaks it, and we don't want that. So that's out, but it could possibly come down and give a retest of that low. So let me go back out, take off the 100, bring it back over here. So these are the 2 levels that if we're going to continue to go down, now we're rallying it up until the secondary close, and it's not looking all that bad. So that's scenario number 1. Scenario number 2 changes the labeling just a tad to ABC. Now, this could be a wave 1 of subminuet wave 5 of minuet C of minute wave 3. So we're really down there in the nitty-gritty here about how we're going to label these waves. Now, if I switch this back around and I were to say ABC, and it likely would be a double, AB 3, 4, 5, C, ABC. If we put that in A, a B, a C, an X, an A, a B, a C. So a double, could be a double ABC down for the first move, okay? Then we do come up. Now, this is where I think it can get a little sketchy because you see, again, after great discussion with Sascha, he's like, he says he had trouble. He has trouble with this because what does it look like? ABC. There's a 15-minute chart. If I took it up in a higher, it's still going to look like an ABC. Even take it there and I go over like this. It's now, it even looks more like an ABC. So even if I take it and we did all this, this was the exercise. We went through all the things. Oh, there's the bottom, right? So there it is, ABC. That's why we marked it an X wave. But the secondary possibility, because the market has done so much stranger things, is that it could be 1, 2. I'm going to open that up one more time. Now, if that's the case, then we would be looking for, we're going to just then run some fibs. Now, this is going to be all screwy, so I've really got to take this one out so I can show the other. And we're just going to put in retracements. So with those retracements, what are we looking for? The possibility 8,493 to 8,474. Now, kind of see that these are going to get pretty dang close to one another. 474 is one level for 618 if it's a 1, 2. And then the market rallies. But here, it's already starting to rally. So is it going to be A, B, C, X, A, B, C? I don't know. But there's a lot going on. And so it's become more difficult to actually pinpoint. So that's why I'm giving you all the scenarios. So again, the first one, WXY, XZ. So that being the case, then I go back out of here. Now, bear in mind, 18,474 if it's going to come back down and get to 618. Wave 2 equals 618, retracement of wave 1. Now, that is a secondary. That's not even the preferred because it just really doesn't count that well internally. So now I go back over to here, and we just put that one back on. And, oops, come on, just do it. Do it, right there. And you can say 618 is 18,441 or 18,440. And that be clean, Z down. Now, the secondary does not necessarily have to go below this one. So I'm being told that this is the way that these guidelines are written. The rules, the guidelines, whatever you want to call it. And I'm now at a point where it's like, okay, but what I will do is we don't want it back down below 360 because it can't. If it does that, then it's overlapping wave 1. But it can be that secondary level. So let's put that in, 405, which would bring it just a little bit below that Y. And then it's going to be pretty big Z. Is there a chance it could be done there? That's where it leaves it. Then it would be a 1, 2, in my take. So there's our two scenarios, okay? That it's a WXY X, and we're looking for the Z, which can bring it back to 18,440. possibly down to 18,405. Not necessary, though. Not necessary. Then we put in that wave 4. That's sub minuet wave 4. And then we go up in sub minuet wave 5. Once that's done, then I throw again, I go back and I put back up the fibs for the 5th wave. So we don't know if it's here or it's going to be here, or it's already done and it sits right there at the current low. All to be determined. Now, if it should come back down and break below 18,360, that's this high as 61. If it breaks below 360, it's just going to present a more difficult scene, and I will be having to go back and to recount how all of this and what it means and what it all starts to represent in terms of this entire move. Because I have to tell you that there's a couple of things, right? We're looking for this high. Did move above that high. So what it could be is 1, 2, ABC, ABC, 3, ABC, 4, 1, 2, 3, 4, 5, 3, 5, done. We're going down. So that is against, now we've got a third alternate. So, but folks, the market, look at this. The market has been difficult. The market is trying to determine, it's like, are we going to go up? We're going to go down. Do we know? Do we not? What are we working on? They got NVIDIA. NVIDIA is going like to the moon. It closed up 7. It was up even higher, but it's like it's trying to get to 1,000. So much happening. And then watching it, other stocks get attacked and just flounder here and there. So there's internally inside of the NASDAQ, there's a lot going on. Inside of all of the indexes, there's a lot going on. So those are the 3 scenarios that could possibly play out tomorrow. If the market continues to get hit and comes down and breaks below 18,360, then there's a higher probability that it's all done. And we are beginning to drop in a larger corrective phase down. Right now, this is still a counter trend rally. And if we're looking at this third being complete here, then we have a larger 4th wave, which should produce a pretty strong decline in and of itself. And I'm talking, maybe 600-700 point decline in a 4th wave. But it's going to remain inside these trend lines. But so if we get up close to 18,875 and we were to drop 700 points, it's where are we? We're still above that bottom trend line. So we can go from the top back down to the bottom, put a wave 4 and then go back up in a wave 5. So still much that can happen, and we stay within the boundaries of this triangle pattern as it moves up to finish. Okay, so moving averages, yeah, they're following along. At least on the hourly, you can see the 200. See how flat that 200 got. Even the 13 and the 20, they're flat, just hanging out flat. And so it's like, all right, so you guys just really don't know. And again, relative strength, not much. Why? Because it was very tight in a set group of stocks. All right, let's go over and take a look at the S&P, because if you thought this one was complicated, wait till you got to catch this one. And again, using that same one, I'm back to, the old horse is being, or old dog is being shown some new tricks here. Again, same deal. Minor 4, so we're in that minor 5th, and we have wave 1, wave 2, and we're looking for this thing to top out and give us the minute 3rd wave. So we're looking for that minuet wave 4 here in the S&P. I'm going to open this up. What do we got going on? This is the hourly chart, so it's a little bit cleaner, a little bit nicer to watch. Again, now, in my old Elliott terms, ABC, X, ABC, double. But Elliott would have to have you count all of this. So this would be A, this would be B, C, X, A, B, C. Still working a double, but this turns into a WXY, X, WXY, X, because it still looks like a 3. And if we're going to come down and do a Z, now I'll take a look. Let's bring it down right to that 15-minute and go in here and take a look. See, the Z could have formed. And what are we looking at? Let's just see. I didn't like that. Gotta get it. I'm very much particular about getting it right where I want it. I'm going to go here, 618. See what it did? Let me take the fluff out so you all can see that. Oh, actually, I'll put that next level down. The next level down is right there at this previous low, which, yeah, we're going to allow for it. If there's going to be a little bit of additional downside, and we still basically come in at 52.72-ish. This one came right at that low, so they're both the same. But as it stands, 0.618, most common for this type of count, and then it fits. Now, if by some bizarre that this ends up actually being bullish and a 1, 2, 3, 4, ugly, 5, it can 1, 2, 3, 4, 5. That's a 1. A, B, C, that's a 2. There's 618, came down, it's done. Rally. Then I'm going to go back, and it's going to be A. I did work it out before. It's kind of very complicated. I would think I'd have to put an A there, A, B, C, put a B wave there. It's very, very complicated all the way through. So it did actually count better as a WXY. But if I had to come down and put the whole thing over here, I could, right? ABC, X, ABC, wave 4, a double ABC. This being problematic, but a double ABC. And then we counted it, 1, 2, 3, 4, 5. That would be a 1, ABC 2. But that would suggest, folks, that we go up. We go up pretty much from the get-go. And we get ourselves back about 52.88, 52.89, and we start heading up to 5,300. And again, see, I didn't violate it, so I left it there. And then that suggests that we're minimally 53.52, and then optimally at 54.02 before we're done with the third wave. Right? Let me go back out off of the 15. Let's go back out to the hourly. We are looking to finish the minute wave 3, and right now we've got the minuet 3. We're going to have a minuet 4 and a minuet wave 5. So yeah, it cannot be done here, right? Because this is zig, zag. And I could put that 3 there, and this is all a 4. So I can put it here, and the S&P would be just slightly ahead of the NASDAQ. If I move this around, put that minute wave 3 here, instead of looking for it over here. And now what I'm looking for over here, this would be the 4, and then we get a 5, and then we get that larger correction that I was talking about, folks. I talked about it on the podcast, that we get like a 5 to 8% decline. You know, this is all in the books. And then I got that other level. We got a level down below, like I think it's a 51, I think it's right there, 51.67, or in that hood, that if that breaks, it then changes the cyclic view. And that's to a more negative picture. So whereas the market begins to break the right-hand translation constantly of a cycle trough, and then the market just continues to produce new highs as that whole longer-term cycle points higher and higher. So where does it start to break that bullish nature of it? Well, there it sits. When we start to breaking down, and eventually if we were to break 5,000, then we're really starting to that we're all done. We're all done. And now we're moving into the next phase, which is going to be a down phase. So 3 possibilities for the NASDAQ. 2, at least 2, if not 3 possibilities here as well. So one way or the other, if I'm going to mark this as complete and I'm marking a 4, then we're looking for the 5. If not, then I'm going to mark this as a minuet wave 4. I'm looking for minuet 5 to complete minuet wave 3, and then we get another break, another corrective phase. And that one might be the one that, you know, if this next imminent correction that I've been talking about, again, the podcast, and now again today, that what really can be going on here is you're looking for a 3 to a 5 to an 8% reversal. That's not the end of the world. And if you kind of do your math, well, you're probably coming in somewhere around in there. So we get up and finish the 3, and we're going to come down to the 4. It's probably going to hold, or we'll have to hold. If it's because I've taken the triangle away, then, you know, it should hold and not be triangulating. So where's that guy? 52, 57. Yeah, you don't want to get, that would get close. It would get close if it came down too much more. We shall see. Moving averages here as well. You can see they're all just kind of clustered and flat. Clustered and flat. Let's go out and look at the daily. Still angling higher, unchallenged. 13, 20, and the 50 and the 200 all unchallenged. And this is sitting way down there, and I should just remove it for now. All right. That is where I am going to leave this now. We all know that this is a holiday shortened week by now. I forgot to mention that over the weekend. It is a holiday shortened. So tomorrow we have durable goods, S&P Case-Shiller Home Price Index and Consumer Confidence, 8:30 a.m. for the durable goods, 9 a.m. for the Case-Shiller, and 10 a.m. for Consumer Confidence. Thursday, we have initial jobless claims and GDP and Chicago Business Barometer, pending home sales, and consumer sentiment, the final from March. On Friday, the markets are closed. That's just the markets, though. All of the departments and the agencies that report the numbers, the economic numbers, will be reporting those numbers. Market will be closed. Globex will be open, though. So it's going to get even more interesting. So again, on Friday, we advanced U.S. trade balance, retail inventories, wholesale inventories, personal income and spending, PCE index, and then even Jerome Powell's not taking the day off. He's going to be out talking about all these numbers that just came out and what comes next. I'm telling you, folks, it's going to be very, very interesting. And if you're taking the day off on Friday, you might just want to kind of check in early to see what happens with that PCE. All right. I am going to end it right there. Our next update will be on Tuesday, March the 26th.